What's up, everyone? Welcome back to another Crypto Mavericks podcast. I'm Joe. You guys, Brian's not here today, so it's just myself, Ryan Solo. But we have returning guests. 6 months ago, we had Alec here. Alec Beckman is the co-founder of Advantage Blockchain and also the VP of Growth for Stallion. So welcome back, Alec.
I appreciate it. Thanks for having me again, Joe. Pleasure to be here. It's a shame Brian can't be here, and like we were just talking about this. He is 20 minutes or less away from me right now.
You know
Um,
what? I should have just bring him on the phone and be like, you got to drive down for this podcast. Only 20 minutes away, right? It's not taking too much time. He's probably not doing anything. No, he deserves
I'm
a
gonna
break.
I'm gonna find him later. I'm gonna drive around Philly till I find him later.
Yeah, you do that. You do that. Well, dude, it's awesome to have you back. Yeah, tell us about Salian. Tell us about your new role there. And
Mhm.
we spoke a little bit, before we started recording. And yield is always a good phrase to hear.
Yeah, so and just for some context, last time I came on was representing Advantage Blockchain, where I'm a co-founder, still very involved there. We're an asset, obviously an asset manager and research and consulting company. And then I recently joined as well Salion, which is an asset manager in the crypto space that focuses on yields. Our main products are really yield around stable coins, both USD and euros, as well as yield on Bitcoin, ETH, and Solana. We can also do other tokens as well, per demand, but it's very native DeFi. It's, very much Web3, everything on chain, self-custody, not, really bringing the institutions into this world of Web3, which, I think is really the next evolution of where the space is going to go and is trending towards.
Tell me you got into Circle IPO, Alec.
I wish, but it's awesome to see. It gives us a lot of a lot of validity to what we're doing. A lot of our stablecoin strategies with both Advantage Blockchain and with Salion are centered around USDC. And just seeing how well they're doing, how transparent they're being about the process. I do love Tether. I definitely reject the Tether FUD that often comes about, but I will say it is refreshing to see something like Circle, who is extremely transparent, has built great products, and allows for, I'd say, a huge supplementation to traditional finance. Being able to use stable coins for yield, for lending and borrowing. That ultimately what DeFi is: settlement, remittances. I mean, I think I saw a number like $27 trillion in volume last year in stablecoins. Everyone's making a stablecoin now. It's becoming very popular, and it's just I think it's so additive to just everything that's out there. And it can all we can have this conversation also, but I do think it's going to help prop up the US dollar because big companies like Circle, Tether, these are the companies that are holding on to so many treasuries and now buying so many treasuries. So many positive effects from stablecoins, and it makes DeFi much more accessible, I think.
Yeah, we can go so many ways with this topic. It has been the hot topic of late. Yeah, yeah, there's so much to talk about in terms of stablecoins, which is funny because stablecoins are typically boring, right? But yields, let's talk about yields on that side of the,
Mhm.
dig a little bit deeper there because a lot of people don't understand where the yields come from. More specifically, a lot of people just know TradFi 3%. People buy municipal bonds, treasury, like you mentioned. But where is stablecoins getting their yield from? DeFi,
Yeah,
right, and all that stuff, and just tell us a little bit about that.
absolutely. So there are multiple ways to use stablecoins for yield. I think one of the most natural ways is what DeFi was originally intended for, which is the concept of borrowing and lending without, these third-party intermediaries. Typically, if I want to go take a loan out, I have to go to, let's call it a bank. I have to, file a bunch of paperwork. I have to provide a lot of information about myself. There's so much that goes into it. A lot of the times I have to post collateral, and it can take so long to actually process a loan. The nice thing about DeFi is I can, you and I, Joe, we're, halfway across the US. We don't even have to know each other. I can post collateral. You want to borrow, you want to lend against it. We can do that instantaneously. And then for providing the loan, you can earn yield off of that. There's also platforms like Coinbase, which you can hold your USDC on, and in exchange, they pay you somewhere between 4 and 5%, and you're essentially lending to Coinbase, and earning yield on that. The way that Salion earns yield is very, I don't want to say unique, but I think it's one of the smartest and safest ways, and most rewarding ways in crypto that's available. And before I talk about how we generate that yield, I think it's important to understand how it relates to traditional markets, because it's the exact same thing. We're doing the exact same thing in the crypto market that takes place on the Nasdaq, or New York Stock Exchange, or stock exchanges around the world in the forex industry. Any industry that has high frequency trading, this is available for. So it's nothing new that we're doing. So essentially, if you think about, let's use the Nasdaq as an example. You, Joe, you have 100 shares of some stock. You want to sell that. I want to buy 100 shares of that stock 30 minutes later. A lot of people assume that what you're doing is you're actually selling the stock directly to a buyer through a platform. And that's actually not the case. What's happening is you're actually selling that stock to a market maker. And from there, the market maker then sells it to other buyers. Now, in the stock market, that is, there's trillions of dollars that's transacted every single day. So for the market makers, they need companies to provide liquidity, in order to satisfy all these transactions. So one of the most popular market makers is State Street, right? State Street is facilitating all these stock transactions on the Nasdaq. Companies like BlackRock and some of the bigger institutions, one of their core businesses is putting up hundreds of billions of dollars, if not trillions of dollars, so that every single day people can sell and buy stocks seamlessly on the Nasdaq. We are doing the exact, obviously there's some differences with crypto, but we're doing the exact same thing at Salion with crypto. So you think about decentralized exchanges, there are, instead of market makers, there are automated market makers. So instead of State Street, it's an automated market maker. It's essentially a smart contract. A smart contract is facilitating the sale and then the buys of certain assets within crypto. Now, thinking about how traditional markets work, everything is so automated now that the way that State Street runs their market maker is effectively a smart contract. It's not technically a smart contract, but it is the technology is as quick, and it's very similar to what a smart contract does. So it isn't too much different. But the big difference with crypto is crypto does, the market makers, the automated market makers, and these smart contracts will really have liquidity for two very specific pairs, versus in the stock market, one market maker may handle 50 stocks at once. So when you have these two pairs on each side, if you want to exchange one crypto for another crypto using a Uniswap, using a Curve, using a Pendle, or some of the more common decentralized exchanges on chain, then there needs to be liquidity so that I can make that exchange. Now, a lot of people will use these strategies. Every single pair on these decentralized exchanges needs liquidity in them. If you don't have liquidity, you have no market. So you could try and sell $100 for $100 of something else, but if there's no liquidity, you may be only able to sell it for $1. And if you've seen, a lot of people have experienced that trading in the market. If there's a huge price impact if there's no liquidity. So when a lot of people typically yield farm or provide liquidity, what they'll do is they'll provide two different pairs. So I'll use one of the easiest examples is USDC to ETH, right? Where I want to buy ETH, I have USDC, it's on chain in my MetaMask wallet. I want to go on Uniswap, and now I want to buy ETH. To satisfy those transactions, there are LPs or liquidity pools that are available to any user that can put up the liquidity for those transactions. Typically, they'll ask you to put 50% on each side. So as an example, let's just say you put $10,000 of ETH on one side and $10,000 of USDC. Now, what happens is as those are traded, you end up with more than the other, right? You started with 10,000 of USDC, you started with $10,000 worth of ETH, but then ETH was actually bought up. So now the buyers, the people that used your liquidity, took a lot of your ETH and replaced it with USDC. So now we introduce the concept of impermanent loss, which is I would have been better off holding ETH because everyone bought up the price of ETH. Sure, I was able to earn yield off of that, but the price of ETH went up so much that I was just better off holding ETH to begin with, right? So the way that we do it is a little bit different. We eliminate the risk of impermanent loss by putting the same trading pair on each side. So we will use USDC and USDC. A lot of people will have USDC on ETH. They want to move that to Base or Arbitrum or Polygon. People want USDC, or people have USDC and want to move that into USDT because there's a market for a certain crypto that they can buy in USDT, but they can't buy it in USDC because there's not enough liquidity. So essentially what we'll do is we will use these stable coins, which are backed 100% plus by the dollar, which are very safe. You have companies that have IPO'd like Circle. You have companies like Tether, which people still feel a little shady about, but at the end of the day, they passed every single stress test that's been thrown at them. And so we may end up with, we may start with USDC on one side and USDC on the other. We may end up with much more USDC on one chain, but at the end of the day, it's still tied to the value of the dollar. So we're able to earn the yields or the transaction fees on all of these, trades by providing the liquidity, but we don't suffer from the impermanent loss because one is not going to be valued more than the other. They're both going to be worth $1.
You've done this before, Alec. This is not your first time explaining DeFi in a in-depth, fluid way. I totally get it. I think our listeners who are listening understand an inch deep of exactly what we're talking about. Can you speak on the yields itself? Because is it more lucrative on the lending, borrowing side on non-stable peers, right? Or is it kind of, mute, meaning like, I'm better off just holding off my money in the regular SoFi account or a Chime account?
Yeah. So yeah, I mean, yields can vary, right? I mean, you like as I mentioned, you go to Coinbase, you have USDC, you can earn, between 4 and 5%. You can do, treasuries for similar. You can go to SoFi, do something very similar. The yields within, you can find lending markets, which, you can find much closer to 8, 9, 10, 11%. The yields that we're able to generate using the strategy that I described typically is between 12 and 19%.
I'm in.
Yeah, which is great, but it's different, right? It's crypto people at the end of the day, 12 to 19% doesn't get a lot of people out of bed, right? Which is really funny. But like, you speak to a lot of crypto people, especially degens, people who are, in DeFi, who are into NFTs, like they're looking for, 3X's. They don't even talk in percent. We want multiples, right? So it's attracting, I think, a different type of crypto investor, not the type who's looking for those crazy returns, but the type who can really drive price action, right? Retail is never going to bring, I mean, it's done an incredible job so far of bringing crypto to where it is today. And obviously, we would not be where we are today, which is a very, a much more efficient market, a much bigger market without the retail money that's come in. But if we want to get to that next level, if we want to start competing with gold, oil, real estate, some assets that are worth, hundred like 18 trillion to hundreds of trillions of dollars. We need institutional money to flow in. Now I know it's kind of against the like crypto ethos and the whole like we this is money for the people, by the people. It's not meant for institutions who can come in and ruin it. It's I see both sides of that, but this type of product is what will attract institutional capital. And you can be against institutions getting into it, but the more money that's flowing into the crypto space, the better it is for everybody. And that does flow into other areas of the market. It may start with Bitcoin, it may start with stable coins, but then that flows to something like Ethereum or Solana. And then from there, it flows into the native tokens that are part of those ecosystems, the L2s, the competitors alongside ETH and Solana. I use those because they're obviously the two biggest. So I do think that stable coins being able to kick off this type of yield is going to attract a new level investor that can really take crypto to a much different level.
Yeah, that's like very exciting. Yeah, for the crypto maximalists. I mean, this is, another side of that, right? Just efficient for mankind overall, something that is much needed.
Yeah.
And institutions, definitely are going to get in on this. Is there anything for the retail guys? Can we get involved
Yeah.
with Salion somehow?
So forget like not talking about Salion specifically. The great part about crypto is that these opportunities are available to anyone that wants to learn about them, right? If you want to learn how to use DeFi, if you want to learn how to use these strategies, if you want to learn about yield farming, like we saw in, I think it was 2020, like that was when the big, DeFi, summer, I think we call it DeFi summer was. People were making so much money, and these were retail investors. These were people who discovered a long-standing concept in markets of I can provide liquidity and I can earn transaction percentages on that, and they took advantage of it, and that was amazing. And I think even going further, even going like less than retail, going to like tertiary and frontier users, like think about what this can do for the unbanked people who have
Yeah.
typically never had opportunities to yield on cash on assets now have the opportunity to do that. You don't need a bank account. I mean, it is much easier if you do have a bank account to access crypto, but there's so many ways to access crypto without a bank account that anybody can do services. Anybody who has an internet connection can then receive stable coins or Bitcoin or Ethereum or Solana as a form of payment. And then they can go and take advantage of all of this infrastructure. Now, the problem today is where the infrastructure is. I'm not going to lie, this is a difficult thing for many people. Most people won't take the time to learn how to use their wallet, how to plug their wallet into a decentralized exchange, how to, perfectly balance into an LP. All these different things that have high technical barrier to entries. But we will get there. And I think, going back to when we spoke 6 months ago, it's one of the reasons why I love Base so much is because Coinbase to me is making that effort to bring people on chain where these opportunities are taking place. And they're trying to make it much simpler, have a much better interface. You think about a lot of the Coinbase trading, a lot of the order flow is going through Arrow right now. Arrow or Aerodrome is is the largest native base decentralized exchange. So what you're doing is you have this front end, which looks like, it's Coinbase, which is at the end of the day, it's kind of a Web 2 interface, but now you're interacting with Web 3 applications on the back end. It's the same thing with now, if you go to Coinbase and you have stable coins, they just announced, I think, yesterday or 2 days ago, that you can actually use that as collateral to borrow against. You are creating financial opportunities for people who have never learned about this stuff, have never had access to this stuff, and you're making it in a way that is much faster, cheaper, and more efficient. The problem is right now how it looks and the interface and experience.
Yeah, definitely this month. Not even, since we talked 6 months ago, it's just been like a
Mhm.
completely different landscape, right? With everything going on with the reversed IDOs, I call it, the reverse IDOs. Now they're going equity route. They're going IPOs, right? That's like the new meta. Gemini
Yeah.
and Tron with Justin. I was like, is Justin Sun and Tron an actual company now? Like versus like 2017, they were just like a freaking meme coin. I'm like, man,
Yeah.
I gotta start looking at them different. Like things have actually changed, like
Yeah.
to your point, like these dexes and sexes are coming together. Sexes meaning centralized exchange, guys.
Yeah.
Okay, like with Arrow and Coinbase. Kraken just announced today they're allowing Bitcoin staking through the Bob network. I'm not sure if you saw that.
Yep.
Uh, bit by bit, they're launching. Integrating their DEX with Byrio on Solana blockchain. So, like to your point, I see like emerging, of these superpowers forming one superpower to make it a lot
Yeah.
easier for the average person. And I'm the consumer where is at that point tipping point for myself. Actually, it's not. I'm already past that tipping point. I'm ready to allocate a massive amount of my portfolio into better yields. But do I
Mhm.
want to? I know how to do it myself, but do I trust myself with all these security risks out there, or would I rather have someone who works with private clients like yourself, institutions, private offices, family offices, to handle a larger amount of money, where it's
Mhm.
significantly more beneficial at these higher rates, meaningfully different in just a few years, right? We're talking about with stables, right? That's never heard of, right? That's like relatively risk free, and I mean, how does that change the landscape? Because I imagine it will, right? Like you mentioned for the average person, but it must have some ripple effects on financial institutions and maybe
Yeah.
products in the future. Like I don't even know how to kind of foresee what's coming with all that. Maybe you have insight on that.
Yeah, I mean, well, you see institutions building now, and they've been building for a little bit, but they're being more public about it. You're seeing people, every institution now is creating their own stable coin. Everybody's building an L2. Everybody's getting involved in like the real world asset space. You see like BlackRock, Franklin Templeton, Wisdom Tree, some of the largest institutions in the world. They're taking it seriously to an effect, and a lot of them are trying out using this technology with their own assets, really in the proof of concept phase. But I wrote a CoinDesk newsletter article actually about this. There is an interesting concept. I believe it's called the theory of diffusion. And I'm happy to send you the article after. But if you just look up my name on CoinDesk, or just Google my name and then CoinDesk, you'll find it. But the idea is that crypto is expected in 2025, and we may have already done this already, but it's expected to pass the 10% market penetration rate or the 10% global adoption rate. So essentially what that means is 10% of global people around the world are now using crypto, right? That is a big number. And if you look at things like smartphones and you look at things like the internet, that is when mass adoption really started to take place once it started to pass that 10% threshold. So everything has been happening, very quickly. I think you and I would say, Joe, that crypto moves faster than any other industry. I mean, it's we spoke 6 months ago. It probably feels like, 5 years. I expect the adoption to kick up even more quickly than it's been. Now that we're passing the 10% threshold. And my article goes into how it affected smartphones and how it affected the internet and kind of where we are and what the adoption rate of crypto looks like, if you compare it year by year to the internet. We've been predicting it for a while. I'm sure you have too, Joe, and a lot of people in your circle, and I know Brian has, where we're in the early stages of this, and it can literally be proven that we are in the early stages of it, but we're finally at the point where it's about to be taken a lot more seriously and things are going to be happening a lot more quickly.
Yeah, yeah, definitely. I'm excited for all the adoption that's happening personally.
Yeah.
We're definitely, I'm seeing it myself personally. Like I mentioned, my portfolio allocation looking to do more and more and more. So
Yeah.
I'm excited about that. Not
Well,
only for
one
the
other
yields.
thing, Joe, and sorry to interrupt you, but I think the other big thing is around look at how many companies are putting crypto assets on their balance sheet. Um, there's I think I saw something. There's at least 100 companies globally with at least 17 Bitcoin on their balance sheet. That's a great start. It's cute. It's nice. It's not big, right? We still have still so long to go. Obviously, companies like Strategy, formerly MicroStrategy, are way ahead of some of the smaller ones. But those are only publicly traded companies. Think about how many privately traded companies are, and I speak to them to multiple private companies all the time that hold Bitcoin on their balance sheet. You just saw SharpLink Gaming, and you have BTCS and Bit Digital. Those are publicly traded companies with Ethereum on their balance sheet. You have companies like Abexi, Sol Strategy, and some others that have Sol on their balance sheet. So crypto is becoming something that people want to have on their balance sheet. And if you want to talk about institutional adoption, that is as big of a stamp of approval as you can possibly get of, we can't not have this as a part of our holdings for the future.
Yeah, exciting times for sure for Bitcoin overall. It's hard to be sad when Bitcoin's over 100,000, but I think most are predicting for like a quarter million before the end of the year for Bitcoin itself. The adoption is pretty crazy. I mean, the biggest news for me was Jamie Dimon, right? JPMD on base. And that's a good segue into base because a lot of things are happening on there, right? Last time we talked, we were talking about Miggles and the meme coin world over there. They seem to have gotten a lot of institutional players on base, right? In the last
Yeah.
6 months alone, a lot of stuff is happening over there. A lot of finance AI agents are popping off in there, like Mamo and Giza, with ex
Mhm.
CEOs of Fortune 500 companies. Yeah, tell us what. I mean, you're not base, maximalist, but tell us what's happening over there because that's stealing a lot of the limelight right now.
Yeah, no, I'm still very excited about base from last time we spoke. One thing that has popped off in the past week or two is BMX, which is a perps exchange on base. Also, Aerodrome's been absolutely crushing it. I think base is just like at the end of the day, the thesis, if you believe in base, is that Coinbase is going to be that AOL of the internet that really brought the internet into the mainstream, or is going to bring, or in Coinbase's case, bring crypto into the mainstream. I think what happened is, and I probably spoke about this the last time we talked, but the idea is, Coinbase has been absolutely crushing it for, since I guess 2016, 2017, in bringing people into the space, being that on-ramp into crypto. Um, and I'll give Kraken credit for this too. Them and Kraken kind of saw this opportunity of, you know, the Trump administration is making it a lot easier for banks to get involved. We've now ended the threat for banks of we're gonna not allow you to participate in the financial system if you're custodying crypto, if you're getting involved in all these areas within crypto. You have so many cases, including myself, of being thrown off of a bank account, but for even interacting with something like Coinbase. Um, so now Coinbase is about to lose market share because the BlackRocks, the Schwabs, the Robinhoods, all of the, and then not to mention the traditional banks, JP Morgan, Goldman Sachs, all of these companies that manage so much money for so many people are now going to they're now going to serve as the on-ramp to crypto. Coinbase is going to lose market share. Obviously, I think when people think of crypto, they want to use something like Coinbase. But Coinbase and Kraken, they said, we're going to get ahead of this. We're going to lose market share. That's okay. Okay. What we're going to do is now we're going to focus on bringing people on chain. We're going to be 10 steps ahead of where Fidelity and BlackRock and all Van Eck and, well, not Van Eck. Sorry, I don't want to throw Van Eck under the bus. They're actually one of the more crypto friendlies.
Right.
But these companies that are going to start on ramping, they're not on chain friendly. They're not digitally native. Coinbase and Kraken have been leading this charge of no, we're going to bring people on chain. We're building out the L2s. I just saw Kraken as Inc mainnet which is their L2, is about to do a an airdrop for anyone that was an early participant of their chain. And obviously, you have Base, which has had a tremendous amount of inflows. You've had good infrastructure being built on there. You've had good DeFi. You've had good NFTs come on there. I think the going back to the original question, which is what's exciting about Base, it's not even what's going on right now. It's what is coming, which is Coinbase right now is where a lot of retail users and where a lot of institutions have their capital. And Coinbase is naturally going to flow them into Base because why would they flow them into anywhere else? Users of Kraken's going to flow you into the Ink mainnet. And why would they flow you into anywhere else? So they're all gonna be talking their own book and pushing their own book, which is a good thing, not a bad thing. I truly mean that as a compliment, and we need more people on chain. I think it'll be better for a lot of people and just open up the applications of what can be done in the crypto space to the masses.
Yeah, and here we are. Oh, here, not we. I was, going down to the alleyways and playing with the meme coins or the Jesse Pollock failed social coin. Did you see that? Between the last podcast we did and now, he tried to make social coins a thing.
Yeah, yeah, yeah.
So, not saying that we wasted time, but like, there's more things that move the needle that's happening on base, like you mentioned,
Yeah.
BMX and Aerodrome and things like that, and it's just exciting to see that they're progressing as well they
Mhm.
are. So, and I didn't know about Ink. I heard about all the stuff they're doing in Kraken, but yeah, that's exciting to see. Maybe they took a page out of Binance because Binance started that way back in the days. They changed their
You're,
native token to their own
you're right.
network.
Yeah, how could I forget Binance? They were the first people to do this, actually. You're so right.
Yeah, and they're massive. Binance is massive, massive, massive.
Yeah.
Super excited for just everything that's just seeing all the everything's happening. But let's talk about all last thing here before we let you go. Is just let's talk about alt assets. And I'm not sure if that's a term I made up, but it's the world that we live and breathe, which is a world of NFTs, memes,
Mhm.
somewhat RWAs, but more so, the funner stuff, I would say. What's happening there? We're seeing a lot of adoption in form of like where you are. Bergen County just adopted like a $4 billion like change from deeds on land to online.
Yeah.
Are we going to see some of that trillions of dollars trickle into the digital asset world?
Yeah, hopefully. I would actually point to two really cool examples of institutions actually coming on chain and hopefully entering the ecosystem that we love and play in. We'll see if it comes, but I'll use Biddle as an example. So Biddle is BlackRock's money market fund that's on chain. And they have qualified purchasers that are part of this. They don't have a ton of investors in it. It's more like they have a few investors who have put in large sums of money into this money market fund. But what's interesting is they're actually being paid out in USDC on chain. So the idea is, and I don't think this has really taken place yet, of these people are now receiving dividends in the form of USDC. It's already on chain. Can we move that money into more of the, let's call it degen side of crypto? It's unlikely because they're institutional investors, but as this opens up to more investors that are in between institutional and retail, this might be the case study of people actually being able to move money from these traditional products into the crypto products that we use. Um, the other one I'd use as an example is Franklin Templeton's Benji. So this is another money market fund that is on chain. It's built by Franklin Templeton, who's one of the largest asset managers in the world, and they actually offer native yield into holding Benji. Not only that, it's transferable. I can send you. It's almost like a stable coin. I can literally send you, Joe, some of this Benji through their app, and that's yielding. It's really one of the most unique products that I've ever seen. It just natively yields. And then from there, can that money be brought into the crypto world? I guess the last example that I'll use is Figure, which is a company started by Mike Cagney, who co-founded SoFi.
Nice.
They just got approved. I believe they were the first SEC approved native native on-chain yield stablecoin. Called I want to say it's called YLDS yields. Um, I could, I might be mixing up a couple of things here, but I'm pretty sure that's what it's called. But that's another thing where people can participate, and that will be more at the retail level. I know the target is institutions, but I believe it will be available as a stable coin to users. You see PayPal create their stable coin. Ripple's about to create a stable coin. This is going to be allowed. This is going to be the big transfer of dollars off chain to on-chain dollars that can then be moved into the crypto market. And if you position yourself well with the right groups that are going to have, that are going to bring the most amount of users into their stablecoin, you could be part of the networks that money will flow into and hopefully benefit, pretty well.
Yeah, very interesting. And we could see kind of where all the big players are and the players are because it is crypto, right? It is transparent. So that'll be very interesting to see. Tell us about where the puck may be headed. We had NFT bubble of 2021. Meme coins have popped 2024. Still doing okay. 2025, Farcoin made a big comeback. AI agents came in there in that meta for a little bit and seemingly will be where the puck's going. But what's on your radar?
Yeah, so I am notoriously bad at predicting this stuff. Luckily, I work with people who are a lot better at it than me. But I just where my focus is at right now is big, large cap coins that can earn yield. I think that we're at an area of crypto where we're still focused on the large caps. I think there's a lot of money to be made on small caps and hidden gems, if you will. But it's like I personally I'm not good at trading and I'm not good at and I'm decent at finding the smaller cap coins. I'm not always good at selling them at the top, right? So I played this game long enough where I know better to I'm gonna hold in the large caps. That being said, where I'm seeing excitement, meme coins I think will never go away. It's a cultural thing. Same with NFTs. It's just that is now embedded in culture, and at every point of a bull run, those will have its day in the sun. A lot of people are interested in decentralized science. Like there's, I just spoke to a company today that's doing telecoms. It's like similar to Helium, but it's actually, they're creating a telecom network that, gamifies using crypto to reward users, not in like a financial token, but in a token that can be redeemed for experiences. So, essentially creating like a telecom company where the more you use your mobile phone, the more points you get that you can redeem. It's just like, airline miles or just like credit card points, which I think is a really cool use case. So there's so much out there. There's so many good things, gaming, AI, supply chain. I still think is a good one. RWA, every run, it's like, oh, this is RWA's chance, and it still hasn't really. I mean, it's been growing, and you can check out rwa.xyz if you want to see how the numbers have grown. But yeah, to answer your question and to stop rambling, I don't know. There's a lot of exciting things in crypto, and I'm excited to see where it all goes.
No, I'm excited we're on the same page. I just wish NFTs came during this stage in this administration versus 4 years ago where
Yeah,
it was the Wild West because there's a lot better, a lot more adoption now, like a lot more on ramps now, a lot more.
yeah,
I can see a lot more stable figures like companies. Not that companies didn't get in before, but they're actually getting and try to formulate a business plan around it because that's what we're seeing now, right? We're seeing people build boards and
mhm,
run P&Ls versus before it was just like, oh, I'm in a garage, I'm going to start an NFT project, right?
yeah,
Or just people dipping their toes in. So yeah, we're
yeah,
we're talking about the same thing. We're talking about within our community, Bitcoin yield, stablecoin yield, which is hilarious because we talk meme coins, we talk all assets, but the most attention right now is the yielding products that we mentioned here on with DeFi and also farming, yield farming, and
Mhm.
off of a bigger cap coin. So yeah, exciting to see where it all goes. It's never a boring day. I'm sure 6 months down the road, there's gonna be some wild thing that's gonna be happening. And but most importantly, we'll both be on top of it. That's good to know. And once we get offline here, I'm gonna ask you, let's how do we take a look at Salion? Because that's some good yields. Oh, did you get a rect? Did you get it on a rect drinks?
No, no.
Rect is doing so well right now. They're self-proclaiming a brand coin, even though Pengu is kind of doing that. They launched in the
Huh?
7-Eleven. They're raising institutional money. So they're,
Oh.
they're like an NFT meme coin turned actual product. So this is
There's
not.
so much in this market. It's impossible to follow it all. I didn't know about this. I have to look into this.
Oh, I'm gonna get Brian to send you some. This is their Rect with OpenSea collaboration. You can't really see it,
Oh,
but yeah, they're
nice.
doing big things with Abstract. Maybe they do some things with Base. I don't doubt that actually. But yeah, I was just on my desk, so instead of getting wrecked in real life, go invest into Salion, guys.
Yes, always happy to talk about Salion. The thing is, nobody has time to focus on yield farming.
Right.
It's a good way to manage cash. It's a good way to earn yield on some of your crypto that you're not going to be trading or moving. So, always happy to talk. If we do have high minimums, I'm always happy to help as well and just show people how to use the technology. I think, a rising tide lifts all boats. So yeah, I mean, we just want to get people involved and help people do it, in a really good way. And then one other thing that I will mention is and I'll leave it here, is there's a new decentralized web oh my God, I'm blanking on the name, search engine called Presearch, which
Oh, nice.
is which I highly suggest people check out. There's a native token to it, and people can earn by using. But it is the first truly private and anonymous search engine, and has some really cool AI features. And if you are a crypto guy, you most likely value your privacy. Um, and this is I would think about it as the proton mail of search engines. So
Great call. Giving some alpha calls here. All right, all right. Or lastly, before we let you go, where can people find you and Salion if you want to be found?
yeah, I'm super accessible. I'm on X, Alec Beckman. I put my name on everything. I'm on LinkedIn, Alec Beckman. You can reach out to me at Alec at Salion, Psalion.com. Reach out. I like to talk to everybody. I like to hear what's going on in the space, and always happy to talk more about what we're doing and our strategies.
Awesome, Alec. Thank you so much for coming on.
Yeah, thanks, Joe.